I've always believed that personal experiences are our most profound teachers. Before we delve into the summary of the book, The Intelligent Investor, let me share a bit of my own journey. My story begins with a significant financial setback, a loss in both the stock and crypto market. The irony? I had Benjamin Graham's The Intelligent Investor sitting right there on my shelf for over 3 long years, but I never truly absorbed its wisdom until that financial stumble jolted me awake. Those losses, as painful as they were, steered me back to the fundamentals. And today, as I embrace and apply Graham's teachings, I've decided to bring you all along on this transformative journey. Let's learn together and stride toward becoming astute investors. Join me now as we take a virtual tour of our community platform ultifinance.com. Imagine a place where curious minds gather, where every question sparks a discussion, every discussion fuels understanding, and every understanding paves the way for financial empowerment. On Ultifinance, we don't just read books, we dissect them. We don't just follow trends, we analyze them. And we don't just discuss finance, we live it. On our platform, we have a series of forums, each dedicated to a unique aspect of finance. From the beginner's corner, for those just dipping their toes into the vast ocean of investment, to the crypto nook, for those intrigued by digital currencies, and the stock market square for those who wish to delve into the intricacies of equity trading. But Ultifinance isn't just about learning, it's about growing together. Share your insights, your doubts, your triumphs, and your setbacks. Every experience, every query, every piece of advice adds a brick to the towering edifice of collective wisdom we're building here. Remember, you're not alone in your financial journey. On ultifinance.com, you're part of a thriving, supportive community. So if you're not a member of the community yet, please join us. Let's learn, let's invest, let's grow together. Enough introduction, let's delve into the summary of the first chapter of the book, which contrasts investor versus speculator. As Benjamin Graham said, at every financial juncture we face a choice, investor or speculator. Which path do you walk? As we navigate through chapter 1 of The Intelligent Investor, let's introspect deeply and identify our true financial inclinations. On the well-lit path of the investor, conversely, on the winding trail of the speculator, it's easy to get lost, especially when the path seems clear. Are you perhaps an investor in thought but a speculator in action? Are short-term reports swaying you, or future projections blinding you? My own journey reminded me of the importance of returning to the wisdom of guides like Graham. In today's rapid digital era, it's crucial to be aware of the platforms we tread upon and their underlying motives. Their success often runs parallel to our decisions, regardless of our wins or setbacks. Every decision, every step has consequences. As we explore the wisdom of the intelligent investor and beyond, our goal is collective growth and understanding. Whether you find solace on the path of the defensive investor or thrill in the chase of the aggressive investor, remember that self-awareness and continuous learning are our guiding stars. Embarking on this journey, I've encountered numerous highs and lows, each one a stepping stone, shaping my perspective and reinforcing my belief in the power of knowledge. Our path is not defined by our successes or failures, but rather, by the wisdom we gain from each experience. It's not about the destination, but the journey, and the knowledge we gather along the way. The world of investing is intricate and ever-evolving, a labyrinth with no one right path. But with knowledge and understanding, we can navigate it more confidently, turning uncertainties into opportunities. I am committed to this path of discovery and growth, and I promise to share every insight, every revelation with you. Together, we'll unravel the mysteries of investing, learn to make more informed decisions, and hopefully, grow not just financially, but intellectually and emotionally as well. Remember, it's not about being right all the time. It's about being adaptable, resilient, and willing to learn. As we step into the realm of financial enlightenment, let's dive deeper into the first chapter of The Intelligent Investor. As the chapter 1 focuses on the differences between investment and speculation, it's time we unravel the meaning behind each term in the case on this book, The Intelligent Investor. Often the term investor is casually thrown around to describe anyone engaging in stock trading, but true investors are far more than just traders. They are strategists, thinkers, and visionaries who act based on deep analysis and a long-term perspective, while others might trade emotionally or irresponsibly. Now, let's draw a line between investors and speculators. Investors, they focus on the fundamental value of the stock and disregard short-term price fluctuations. They invest based on intrinsic values, even without knowing the future price. They tend to buy when the market is down and avoid overpriced markets. They are independent thinkers with a reliable system for decision-making. They control their emotions and avoid impulsive decisions. On the contrary, speculators are the gamblers of the stock market, swayed by market trends and the prospect of quick returns. The intelligent investor, however, knows that the stock market is not a casino, but a marketplace to buy ownership in businesses. So, are you ready to be an intelligent investor? Let's journey together and explore the depth of financial wisdom. In the last section, we established the stark differences between an investor and a speculator. Now let's dive deeper into understanding speculators and how speculation can sometimes be disguised as investment. Speculators are the adrenaline junkies of the financial world. They thrive on short-term market movements, often ignoring the true value of stocks. They are easily influenced by popular opinion and can be swayed by optimistic estimates. Unlike investors, their moods and strategies fluctuate, and their actions can be impulsively guided more by emotion than by logic. However, speculation isn't always as straightforward. At times, it hides under the guise of investment. Benjamin Graham, the father of value investing, warns us against certain practices that might seem like investment but are actually speculative in nature. Firstly, basing trades on short-term earnings reports can be a slippery slope. Given the competitive nature of such trading and the likelihood that current stock prices already reflect these earnings, it's a risky bet to place. Secondly, trading based on optimistic long-term growth prospects can also lead us into speculative territory. Graham was skeptical that individual investors could consistently predict and beat the market based on these predictions. So, as we navigate the financial markets, it's crucial to distinguish between investment and speculation. The intelligent investor is aware of these distinctions and treads carefully. In the next section, we'll discuss how to cultivate the mindset of an intelligent investor. Stay tuned. In this section, we're going to uncover the reality behind the allure of active trading, a practice often associated with speculation. Firstly, let's tackle the hype generated by stock brokerage commercials. They lure users in with the promise of convenient low-cost trading. However, it's critical to understand that brokerages profit every time you trade, regardless of whether you're making or losing money. Especially those offering zero-commission trades, they monetize through methods like selling your order flow to market makers, who often capitalize on the naivety of inexperienced traders. Next, let's consider the impact of technological advancements. With the rise of mobile trading apps and zero-commission trading platforms, the barrier to entry has significantly reduced. But this easy access has led to an increase in trading activity, and consequently, a decrease in patience among traders. For instance, while in 1973 an average shareholder might retain a stock for 5 years, by 2002, this holding period was down to just 11 months. In volatile times like the dot-com bubble of 1999, stocks might be held for only a few days. The drawbacks of active trading, however, are often overlooked. Firstly, active traders, especially those acting impulsively or without sufficient information, can make costly financial mistakes. For example, in their haste to trade, they may accept a price that's not in their favor, leading to potential losses. Secondly, there are tax implications to consider. Profits from stocks held for less than a year are usually taxed at the higher ordinary income tax rate, rather than the typically lower long-term capital gains rate. In the next section, we'll discuss how to cultivate the mindset of an intelligent investor and avoid falling into these traps. Stay tuned. As we transition from the illusions of active trading, let's delve into the distinct approaches of two types of intelligent investors, the defensive and the aggressive. Defensive investors, or passive investors, prefer a simplified approach to investing. They're not overly passionate about the intricacies of the financial world, and aim for returns that align with the market average. Their primary goal is to avoid significant errors and maintain a steady course. On the other hand, aggressive investors, also known as enterprising investors, are proactive and strategic. They allocate considerable time and resources to analyze and choose stocks. They view investing as a strategic game where they can apply their financial acumen to achieve returns surpassing that of the passive investor. Graham suggests that an added return of about 5% annually pre-tax is needed to justify the extra effort they put in. It's important to note that both defensive and aggressive investment strategies can be intelligent and yield positive results. The key is picking a strategy that aligns with your personality, goals, and risk appetite. Consistency, long-term commitment, and emotional regulation are crucial, regardless of the chosen path. In the coming video, we will delve deeper into the intricacies of both these investment strategies, providing a comprehensive understanding. Stay tuned as we continue our journey into the world of intelligent investing. And see you for Chapter 2 of The Intelligent Investor.